Hey everybody, Tom Gentile. I want to welcome you to this week's live trade. This is Monday, what day is it? March the 2nd? Yeah, my daughter's coming home in a couple of days. March 2nd, 2020. Jay, do I sound muffled at all?
Not muffled. I'll turn my volume up and maybe you come in a little bit louder on my end here.
I might sound muffled is that,
Well, there you are.
we're
Yeah.
prepared.
You look like Bane from Batman.
Oh my goodness. Yeah, I do. It's weird, huh?
Yeah.
So let me take this stupid thing off. This is one of those N99 masks, meaning it comes with a 4-layer cartridge that you replace in it. I don't even know if you can find them anymore. My brother-in-law works at Sherwin-Williams, and he was telling me that everyone's been cramming in there to get the masks, the ones that the painters use. And the reason why they're so popular is because they're not those surgical masks. They're the ones that are N95. And so if you have something that's N95 or higher, that actually is supposed to be the good mask. And so they've ran out of stock on them, and people are just running around grabbing them. And I think they're turning around and trying to sell them on eBay to make money. But anyway, we got a good or a great presentation for you today, guys. Let me jump right to the screen. You should have the screen right in front of you here. Tons of things that I want to go through. So first of all, welcome to our live trade series. For those of you that are Optionetics students, we brought you in here. We're doing 2 weeks where we're just opening this up to everybody. All right. So just to give you an idea, we started this as a February challenge. And Jay, you're going to help me out here for a second. Who's in here that's been in here for the majority of February with us? We started this in February, went through the entire month, Monday, Tuesday, Wednesday. There was a day or two that Jay was doing this without me. We had a day that was a holiday, that was a Monday. Obviously, we didn't do it then, but we've been literally coming out here and kind of showing you almost an over-the-shoulder look of trading. I've been trading using my account. We've been going through basically spotting rules-based opportunities, creating those low-risk trades and plan exiting and managing those, and even some of them have been day trades. And so those of you that have been here in February, tell me, let me know who you are, and let me know how you've been doing. All right, because that's important as well, because I want to give the newbies, the Optionetics students, first, you're here for a number of reasons. Number one, you probably want to know what's going on with this market, and we're going to talk about coronavirus, and we're going to talk about the opportunities that are involved in coronavirus. But we've got that. You may be here because you want to kind of get reacquainted with not only the trading strategies but even the tools that we use too. And some of you might want to just really see how you place these orders, how these orders are being placed, both the entries and the exits. And we plan on doing that over the next 2 weeks. The sessions are being recorded. We'll get the recording out to you immediately after the live event. You can ask questions right here live with myself and Jay. Because we've got a large group in here, we've got our, we put this out to the entire Optionetics community. So it's not going to surprise me at all if we fill the room up and there's going to be people trying to get in. So I'm saying that because we may not get to your question or comment, and if we don't, I'm going to apologize ahead of time. Because there's just so many people that are on this, they're going to be on this series in the next couple weeks. And then finally, the disclaimer you see on the screen here, we put this on every webinar that we do here at Optionetics and Tom's Trading Room, and we will, you can read this word by word. I just want to mention 2 things real quick before we begin. Number 1, stock and options trading has large potential rewards, but also large potential risk. And obviously the risks are larger now on the buy side as an option buyer than they were even 2 weeks ago, because they're more expensive and the volatility is much higher. The other thing I want to mention is that myself, Jay, who's here, any other guests that we bring on, whether they're with Optionetics, Tom's Trading Room, or consultants, etc., we are here to show you how it is that we trade. We're not personal investment advisors. We do not give specific trading advice, and everything I'm going to talk about is in US dollars unless noted otherwise. So first of all, I want to welcome all of our repeaters as well as our new students. And you know what? I got to start something out. I promised I was going to do this last week, and we just got so involved with trades and finding trades and placing them that I just simply forgot to talk about this. And this is how you can look at the weekend, and how the markets are faring in the weekend coming up towards Monday with something called Weekend Wall Street. All right, so what is Weekend Wall Street? Let me show you first how to find it. So what you're going to do is we're going to open up a Google page. So I have Google, and I'm going to type in Weekend Wall Street. And that's going to take you to 528 million results in a half a second. That's Google. You don't need to worry about 528 million. You only need to worry about the first one right here. And it's IG.com. And you'll see the header that says DJI Weekend Wall Street Index. That's what we're interested in. If you click on that, it'll take you straight to that index. Now, you can see it right now. The Weekend Wall Street Index is at 417 points, higher than it was where we ended on Friday. This is going to be off on the Dow a little bit. And really, it's actually off a couple hundred points because of how volatile we were on Friday. Because see, the Dow, the actual Dow Jones Industrial Average closes when on Friday? It closes at 4 o'clock. All right, Weekend Wall Street starts its weekend clock at 4:15 because it incorporates the futures markets, which are open an extra 15 minutes every day, so they close at 4:15. All right, closes at 4:15 on Friday. It doesn't open again until 6 p.m. on Sunday, and so Weekend Wall Street starts at 4:15 on Friday, and it just keeps going. So it's going to be off a little bit, but this is really a great way of being able to get an idea of where the markets are going to open. This was, by the way, this number was down this morning, and we opened down. It's down. It was up. It's just a great place to go to see where the markets look like they're going to be opening on a Saturday, on a Sunday. What is Weekend Wall Street? This is what's called CFD trading, or what's called contracts for difference. Okay, a contract for difference is very much like a futures contract. It's just a bunch of buyers and sellers that really are kind of betting on the future price of the DJI, so you can get an idea where they are. You know, I'm not suggesting that you trade this. I don't trade this. I simply use it as a barometer of where we're going to be on Monday morning. So I thought I would share that with you guys. I apologize for not sharing it before. We had discussed this. We discussed this many times before, and I just never got around to showing this to you. So my apologies. Okay, so we'll talk about that. Let's go ahead and get into an update with you. So I want to do a market update. I did a market update late this morning, and I want to show it to you. And I want to show you what's happened since then. So let's go ahead and start with that market update using tomsoptiontools.com. So to do that, we would log into tomsoptiontools.com, and when you do log into tomsoptiontools.com, you'll get to the username and password. Once you go through that area, you're going to come to 4 different areas. We've got Option Trader, Contrarian Trader, Complete Trader, and our Partners and Masters series. So we're going to spend some time on Option Trader, Contrarian Trader, and Complete Trader, all within this webinar. All right. Next week, I'm going to get into something called the Partners and Masters area, and we'll talk a little bit about that next week. But for today, tomorrow, and Wednesday, we're going to be looking for trading opportunities in these 3 areas. And as we go through them, we'll show you where to find these for those of you that are Optionetic students that are getting reacquainted with your tools. Right? If you do not have a Tom's Tools account, and after today you decide, hey, maybe I might want to add this to my portfolio, then what you do is, after logging into www.tomsoptiontools.com, where it says username and password, you might not have one. Above that, it says subscriptions. You can subscribe if you've never subscribed before. If you have subscribed and you remember your username and password and you just let it lapse, you can renew by clicking on the renew button. All right, so let's go ahead and get started. So we're going to go into the Option Trader area right now. And under Option Trader, I've pulled these charts, and I blew them up so that we could all see them, but I pulled these charts by going to stocks and stock charts. And so what I did was I ran what was called channel analysis on these. So what our tools will do is they'll look at the long, intermediate, short-term channels, and what we're looking for is we're looking for this channel collisions, all right, these channel collisions that are happening. So as you can see here, we had a channel collision on SPDR or SPY, the SPDR 500. Is the spider options are this is the ETF for the S&P 500, and as you can see, this is going back into October 1st. You can see between the beginning of October all the way out till just about a week and a half ago, we just had this nice slow and steady climb that was going on. Little bit of a pullback there at the end of January, beginning of February, but bounced right back. All-time highs about, what, 10 days ago? And that was at 340, just around 340. Then we had a monster pullback that came all the way down Friday, down below 290. All right, so about a 12% pullback in the S&P. Then from there, we jumped up a little bit, and this was where we were as of this morning. All right, at around 11 a.m., we had opened, all right, but from there, we fell off just a bit. Well, guess what's happened since 11 o'clock? This has all changed. So I want to go over with you, and I actually want to go into the tools, and I want to go to stocks, charts, stock charts, show you how we got this. Now, I'm going to type in SPY. Here's SPY. Look at what happened just in the last 2 hours. That red is now green. We've now moved higher. We're now at where are we at the level of? We're above 300. We're approaching 305. We're actually around 303 right now if I were to just to ballpark this, right? If you see here, 303.09 was the close, and that was as of 12:55, so just a few minutes ago. All right, so there's where we're moving. It looks like we're getting some continuation to what happened on Friday. If you remember what happened on Friday, we were lower, and then the last half hour of the day, it was almost like the short sellers decided to take profits, and the longs got in at the same time, and this was a vicious move. In fact, Jay, I don't know if you know this, but Bridgewater, the Bridgewater Fund. So back in November, they went and bought a bunch of S&P 500 put options that were dated in March. They bought the March dated puts as protection against their portfolio. And we believe, based on the volume, there it is right there. Take a look at that big volume spike. Based on this volume. Now remember, you know, if you look back in February, the volume was only about 40 million shares a day. Then it started climbing as the market was going down. Then you got this huge rush of volume that came in. We traded over 350 million shares of SPY on Friday. Believe a lot of that was on the buy side at the close. And a lot of it could have been Bridgewater converting their stocks, their put stocks, and selling puts or buying the S&P against the short put and exercising the puts for that particular day. Because this all happened the last half hour today, was this big move higher. Now we're getting that continuation that seems to be coming into place too. All right, now, when I look at the markets, I don't just look at the S&P and decide, all right, I'm done. This is all I need to know. What I want to do is I want to look at the four corners of the market. So I need to look at what the bond market's doing, what currencies are doing, what are commodities doing. And that gives me kind of an overall 40,000-foot view of the market itself. So for bonds, we're looking at TLT. Going to update this TLT, and you can see here now, TLT actually was much higher today than it is right now. It actually, if you look at the highs, the high was 156.50. We're at 155.92. Now I can tell you this went from 156.50 down to 155.50. Now it seems to be creeping back up. All right, so what's going on with bonds? Well, let me show you. Okay, if we looked at the bond market, we can see that bonds, that TLT now has a 99% chance of a March rate cut, a rate cut this month. Now, I don't think the rate cut is going to change anything, honestly, because this is more of a biological issue and not an economic issue. But the Fed wants to make sure that there's plenty of liquidity out there, and there's not going to be a big run on banks, and all of a sudden everybody, acting like World War III is here. So they want to make sure that that there's plenty of liquidity out there to continue to do business. That's why the rate cut may be coming, and the rate cut they're looking at is something between 0.5 point to 0.75 point of a cut. That's a huge cut in one chunk, right? So that's possibly coming, but I want you to take a look at, more importantly, where we ran up to. All right, we ran up to that 155.5. That's the long-term trend channel, right in line with the shorter-term trend channel. So this could be a really good area of resistance. This stacking of the channels on resistance right now, and this is looking very, very overbought, especially with what has happened just in the last 10 trading days. Right? If I were looking at this, the 50% pullback would take us back down to around 150. And I think that could easily happen, even if the rate cut comes. In fact, it might come right after the rate cut. Buy the rumor, sell the news. So that's what TLT is looking like. Let's move on to the US dollar. So this is the US dollar, and we're actually looking at the ETF for the US dollar, which is UUP. UUP is the PowerShares Double Dollar Index. So when you see the Double Dollar Index, where it was at 27 and it came all the way down here to 26 and back to 27, and now it's dropped down to the low 26s again. These ranges that are moving are twice the range of the US dollar itself. So the US dollar is still very stable, right? But it did run up quite a bit between the beginning of the year and 10 days ago, and it looks like it's taken 50% of that back. That's happened in the first couple months of the year, took it all back in the last 10 days. But it does look like it wants to hit some support here. All right. Next area I like to look at is commodities itself, USO. So this is interesting. USO was trending up since October, when USO went from about $10.70 all the way up to above 13. But since the beginning of the year, this has been trending down. It hit new lows on Friday, went down to almost 9, about 9.25, and it popped up. And again, this is where we were at 11 o'clock this morning. Where are we at now with USO? Let's take a look and see. So I'm going to go in here. I'm going to type in USO, and USO has popped, and now we're back above 980. We're at 986. From just being at below 920 on Friday. This is a big move, This is 9% move just between Friday's low and today's current price. All right. Now, for those of you that want to know where am I getting these channels from, all right, what I'm doing is I'm just bringing up the chart here on our tools, and down here where it says channel test, just click on channel test, and it's going to bring it in line for you, and you can see there's the channel that I was showing you. And we stayed in, we came down, we hit the bottom part of this channel, but then we closed back up into this dotted line, which is our stock chart peaks. And now we're above the stock chart peaks. And when I look at this, I look at, okay, where's the next area of resistance? Well, it's going to be up here, right at this round number of 10. And if 10, we can get through 10, we're looking at 1050, a little bit over 11, but it has a lot of resistance areas it's got to climb through to get out of here. But I still think oil has become a value out there, if you could call it a value. Not only does oil have a bounce today, but and I said this to the folks that were have been on with us for the last month, is that oil is looking more and more now like it wants to maybe start to follow the seasonal bull that it has going on right now all the way up into July. I just don't think we're going to see the kind of moves that are going to take us above, $55, $65 a barrel like we saw last year. All right, so that's USO. And then finally, let's take a look at one more, GLD. GLD had a wild week last week. All right, here's the trend channels for GLD, but look at what happened. This was when we had last Monday. We had a big pop in GLD, and then it closed down on the day. That was interesting to me, because it told us that gold was way overvalued, and it was going to move from a risk off asset to a risk-on asset. It started following the stock market, especially on Friday, when all of a sudden we went from 158 and change on GLD, and then Friday we closed down here. We went below 148 at one point and closed right around the 148 level. Well, today we had a little bit of a pop this morning. Let's see where that pop has gone, if it's still there. So GLD, is it keeping the bids? Yeah, it hasn't really moved much. Take a look here, you can see. All right, not much of a move, but it's still there. All right, so that is the four corners. And what we look at is, we look at again, SPY, that's the stock market. We looked at TLT, that's the bond market. We looked at UUP, the US dollar. We looked at USO, that's the commodity ETF for crude oil. And we looked at GLD, which is the commodity ETF for gold. I want to look at one more because I'm just curious. Silver had a terrible day on Friday. So SLV is the ETF for silver. I mean, look at that. I mean, we went from over 17.5 to 15.5. Boom. I mean, just really gapped down hard on Friday. And we're in an inside, both gold and silver ETFs have what we refer to as an inside bar, an inside day. That means today's high and low is still inside of Friday's high and low. And so that might be a very good indication if we reverse to the upside or downside, if we're going to get some momentum outside of that move. The other thing that I'm interested in looking at, that would be, what was the volume looking like on those days? We had a volume spike in equities. Did we have a volume spike in other areas as well? All right. So that is stocks, bonds, currencies, and commodities. Jay, are there any questions out there or comments that you are seeing that are happening that maybe the populace is asking about?
Yeah, the majority question coming in that I was going to show when I get the con, but you can take it now since you're there. Show them how to get those dotted lines on there, please.
Ha ha ha! There you go, right there. So down below, right here in the controls, if you go all the way down the bottom, you're going to see an area that says show volume bars, grids, and stock chart peaks. And stock chart peaks are what you want to have check marked. If you put that on here, then this is going to be looking at our recent highs and lows, and it actually looks at closing prices, the daily closing prices, where we find clusters of them to create these support and resistance lines that we call stock chart peaks. All right, so great question, Jay.
You have a moment to look at IWM. I know we risk everybody else typing in their tickers now if we look at one, but
yeah, sure, why not?
But we'll honor Olga. Everybody else, hold your tickers back until Tom asks for them.
Yeah. Okay. So yeah. If you take a look at the Russell here, iShares Russell. I mean, the same thing kind of happened here. Is that you look at the Russell 1, 2, 3, 4, 5, and 6 days. All of these indices are literally taking the same path. Just in one form or another, where they're making that big move. In this case, it was been down, but we had a reversal on Friday. Looks like we're getting some continuation today on the Russell and the indices themselves. And I'm actually going to take you a little bit farther with this as well, and that is by looking at the real-time moves. So those of you that are here live for the first day. All right. And man, I'll tell you, we've almost maxed this room out. So I'm not even going to ask this question because I'm going to get hundreds of people saying, yes, I'm here for the first time. All right. What I'm going to do is I want to show you something that we started doing in the month of February. And I'm going to offer this to the entire Optionetics community. Okay. So let me talk about something real quick that I've never been able to talk about before. So when we got Optionetics back in 2017, it came with a little provision that I was not allowed to talk about other brokerage firms, except the one of which we reacquired from. Okay. Then the one, you all know who I'm talking about, acquired this firm just recently. TD Ameritrade, which TD Ameritrade operates several different platforms, one of which is the Thinkorswim platform. And this is I think this is a great platform. I use it really for charting more than anything else, because I mean, I have my Schwab, I have brokerage firms. I have a handful of different brokerage firms that I do different things in. All right. But this one right here, I think has one of the best platforms out there, because it has something, you know, you can do several different things. You can monitor and analyze and scan different things. They have a market watch tab where you can actually go in and look at the markets, you know, different stocks themselves. They got their chart tab, tools, etc. I really like their chart tab, and I actually use this. This is simulated trading is what I'm using. All right. So I don't use this one for my my orders, and you know, I mean, I couldn't use it while I was with the big guys, but now I can, because they're all, you know, one happy team now. So I thought what I'd do is start to show you what I use the Thinkorswim platform for. Now the neat thing that I can do is and I'm in the charting tab. So if I go over here to the right hand side, all right, and there's a little box here, and I can click on that, and I can open up as many boxes as I want. I'm going to open up 4 boxes right now. So I've got 4 charting boxes, and I'm going to put in the upper right hand corner, I'm going to put SPY, and notice SPY, and I can go in here, and I'm going to go into the settings, and I'm actually going to, under equities, I'm going to turn off the extended hours, because I don't want to look at the extended hours when we're in session right now. But this is the SPY. And if you notice, this was last Monday, Tuesday, Wednesday, Thursday, Friday, and today. This is a 5-minute bar. And if I click over here and expand this, this is what the stock market's done today since 10:30. Since 10:30, SPY has broken out of this range high we have here. So I have the high range and I've got the low range for the first hour today. And it's broken out and it's ran higher. We've pulled back and we ran higher and we started to pull back again. But notice how my chart is painted green in the background. All right. Now let's take a look at bonds. So the bond ETF was TLT, if you remember. So the bond ETF for the day has gone up, and here's the high for the day. Notice it was above the first hour high for all of 10 minutes, and it's fallen down more toward the bottom side now. Now, if we go below this low, this chart's going to turn red. All right. Let's take a look at UUP. So here's UUP. Now this is the way that most of you would see this chart if you were opening the Thinkorswim account for the first time, and you're opening up the platform for the first time. You'd see a D up here. That means daily. I can change that to a 5-minute chart. There's the 5-minute chart. All right. The other thing I can do is I can go into settings, and I'll open up a chart settings. I can come over to equities. And I like to turn this show extended hours trading session off. And I want to see what it's doing during the New York session. So here's dollar, Monday, Tuesday, Wednesday, Thursday, Friday. Here's today. Now notice my today just looks like a regular chart. I've got volume at the bottom, I've got my chart, but I don't have this. That's because I have coded my own scan for Thinkorswim. I actually wrote some ThinkScript is what it's called, to where I've actually coded this in. Now, make a long story short, I gave this scan away all during the month of February to all of our tools users. Okay? So, those of you, so I'm going to make that offer out there to all of our group who are here with us today. Those of you that are using our tools, that are tools members, I'm going to be giving you some of these scans. And so the first scan I'm going to do is I'm simply going to give this away to all of you that are here, regardless of whether you use our tools or not. Okay. I have some other ThinkScripts that I'm going to be giving away during the course of the year. These are only going to be for our tools members. But this first one, I thought, you know what? I'm going to share this with everybody. So I have this, and what I'm going to do is I will be giving you this in an email this afternoon with the recording, along with a step-by-step instructions on how to insert it into your Thinkorswim. If you don't have Thinkorswim, you can get a free copy. They have you can go and download their paper trading or simulated copy, and you can utilize it that way. All right, but what you're going to do, and I'm going to add this right now, is I'm going to go into, there's a little flask. It says analysis tools, and you have all kinds of analysis tools that come with this, but I'm going to go to edit studies because I have my own analysis tools. I call them TTR tools, and I've got my TTR opening range, and I'm going to go ahead and add that. See where it says add selected, and I'm going to put, it's putting it right over here. Now what I'm going to do is I need to change this. I keep changing this for some reason. It goes back, but I want to use the first 60 minutes of the open. So the first hour of the day, I want to have that in there. And between 9:30 and 4 o'clock, that's 9:30 to 1600 hours. That's all that has to be done here. The first 60 minutes of this market is what I'm interested in. And what I'm going to do is I'm going to click OK. And when I do, look at this. So I got a red line here. You know what this red means? This red means that we are below the first opening hour of the day. Now, I use this because it's visually appealing for me. I like to see where the stocks, bonds, currencies, and commodities currently are to give me a read on the stock market. All right. Stocks are up for the day. Bonds are right in the middle. They're in what I call no man's land. All right. No bulls, no bears. Since the first hour of the day, UUP has been selling off, and it started selling off at 11:55. And as you can see, we were at 26.34, came down to 26.29. And I know some of you are looking at this, we're talking about pennies, but the dollar, you know, currencies are some of the most liquid traded assets in the world. So they're very, very stable. But when you see the dollar down 0.83% today, that's a big amount. All right. And then finally, I'm going to come over here and I'm going to type in USO. Same thing's going to happen. There's my daily. I'm going to change that to a 5-minute bar. I'm going to go in and I'm going to remove. I'm going to remove the in the settings. I want to get rid of, in the equities area, the extended hours. All right. Now there is my 5 minutes of what's happened with the oil markets today. All right. So let's take that and let's add the TTR opening range on. So go in. I'm going to type in TTR and do a search. Here's my opening range. Let's go ahead and add it. And yes, I need to make that 30 a 60. So I can do that by just simply clicking on the plus till we get to 60. And, you know, maybe if I save this, then I won't have to keep changing it all the time. So there's OK. All right. And let's go ahead and it's in there. And see, notice it's under price. Here's volume and lower. I don't want it in there. I want it actually sitting right on top of the price. So if I click OK, there we go. Now I've got my oil chart. So now I've got stocks in the top left, bonds in the top right, currencies in the lower left, commodities in the lower right. I got a quick read on what's going on in the market right now. Does everybody see that? All right. How cool is that? And I know, Jay, I know there are questions. How do I get this? How do I get this? How do I get this? I'm going to email you the code. I'm going to share a piece for you. For those of you that have Thinkorswim, I'm going to share this code with you, and I'm going to share with you the instructions on how to put this in, and then you'll be off and running. The better part is I'm going to be doing this each day for the next couple of days. So for Tuesday and Wednesday, I'm going to be setting this up. I'm going to show you how to set it up. So if you download it today, you'll be able to work with me tomorrow, and we'll set this thing up for you. And then you can then save this as a style. All right. You can come up here and you can click on style, and you can actually save a style, and you can call it whatever style you have. Because I actually saved this last week, and we saved it as a style. All right. And I called it the row style, risk on, risk off. So I have that saved as a row. I got lots of other styles in here that I've saved too. But I want to show those of you that haven't used this before or that have never used any of your own indicators, how we can go in there and create our own indicators. So now I have an opening range indicator in there. So quick comments from you guys. What do you guys think about this? Those of you that are brand new, you think that this might help you assess the markets on a day-to-day basis? because I think it helps me out tremendously. And we've got some folks out here who have been with us since February that really love this as a visual add to the screen. All right, Jay, comments, questions, comments, etc. You can unmute yourself
Love the
too, Jay.
background
That might
color.
help.
Yep. Very helpful. Thank you. Love the background chart color. This is going to help. Yeah, so good comments coming in.
Awesome. Okay, so now, I mean, let's move on, because I got a lot, a few more things I want to talk about, and then Jay, I'm going to turn this over to you in a few minutes, and you're going to really kind of discuss that that area of going in and spotting the Darknet signals and spotting the money counter signals, and I've got a couple trades that are open right now. I'm going to check on those while you're doing your thing, and we're going to see where we are. So volatility isn't over, guys. I mean, I think we're going to see the viciousness as much to the upside as to the downside. Long-term investors, experts are saying this, and I think it bears repeating. If you didn't trim your positions last week after the first day of the mess, then perhaps the best thing to do if you're a long-term, multi-year investor, stay the course. I mean, I have a lot of stuff in my portfolio that, if anything, if we keep having this happening, I might add to some of my positions. In fact, I'm actually adding to oil and energy positions. And then for short-term traders, there's lots of opportunities. You just have to be willing to accept the risk or mitigate it. And we're going to show you how to do that here next. All right. So before I turn this over to Jay, let me just show you guys what I saw for the month of February. These are expensive options for the month of February. So S&P has become the #1 expensive option if you look at where it was at the beginning of the month and where it was at the beginning of March. So that's gotten expensive. EEM, that's the emerging markets, expensive. Bank of America, all right, GDX, QQQ, AT&T, Apple, AMD, Microsoft, and then we end off with the iBox. But these were the most expensive options when you look at where the high implied volatility was, where the low was for the month, and where it was on Friday. Okay, cheap, and I wouldn't necessarily call these cheap. They're just cheaper than they were at the beginning of the month. Stamps.com, Beyond Meat, Zillow, Yelp, L Brands. You know why these are cheaper than they were at sometime earlier in the month? Because a lot of these stocks had earnings in the last month, and so they're just not as expensive as they were before earnings, but they're still not cheap, and in some cases because of what's happened with coronavirus and how it's wreaked havoc on the markets. Now, again, if you're with us for the first time, you might wonder, what do you do in a world crisis like this? And I'm not going to get into details. We got a YouTube channel. I put a lot of stuff out there on the YouTube channel. And if I were to give you guys the, let me give you the link to subscribe to for those of you that are, kind of coming back in and checking us out. As well as I didn't give the YouTube channel out last month, but let me give it to you guys. I'm actually gonna put it in the chat box. So it's www.youtube.com/Tom's Trading Room. That's it. You can click on there. We got hundreds of videos out there. We put videos out every week. You can subscribe, and if you subscribe and you make sure to be notified every time we have a new video out, we'll push you a notification so you can see that video. And a lot of it's based on markets and updates and some things that we're doing, like the 3 steps to the corona, to trading world events. I have a whole video out just on trading through a world crisis. But really, this is the gist of it. Take less risk. That's step 1. Step 2, look at what's going up in a down market. All right, if you're simply a buyer. And then number 3, exploit volatility. And one of the best ways to exploit volatility is to use options, and not just options, but use spreads, so you can hedge that vega risk. You can hedge that theta risk, because that's what it's all about right now. All right. So at this point, what we want to do now is talk about Contrarian Trader. All right, Contrarian Trader is another part of our software, and it actually has to do with Darknet channels. So what we can do here, and I'm going to turn this over to Jay. Jay is going to do a little deeper dive. He's going to look at some Darknet channels today, And our rankers and analysis and Darknet is all at tomsoptiontools.com. Jay, you ready for me to pass this to you?
Yes, sir. Go ahead and fire that over, and I'll accept.
All right, let's find you in the sea of people. There you are.
Yeah.
And there
Hopefully I'm
is
in
a
the
sea
right room that
today.
you found me.
Hey, man, I'm excited to have this many people in the room.
Yeah,
We haven't done a live trade. We haven't done a live trade like this for everybody. Last year I think we did it sometime, but we haven't done a series where we're doing 6 days. The first 3 days of this week and next week, where we're inviting everybody in just to see what we're doing. So I'm excited. Jay, I'm
well,
going
you
to shut
should
up
be.
now and I'm going to let you talk.
All right, all right. You should see my chart on the SPY there.
I do.
And I'll mirror your sentiments about the excitement, Tom, but I got to tell you what's coming in from the students. Some of these guys are saying it's a little bit hard for me to track, falling a little bit behind maybe. I haven't done this in about 10 years. You know what?
And you know what?
I was with Optionetics 5-6 years ago. I stepped away. I'm coming back now. So I'm telling them to just stick with it. I mean, it's tough to jump back into the deep end of the pool, you know?
Let me tell all of you that are brand new. Okay, so we did this for February, and we had our tools guys in here. We have partners in here. We have some of our system mastery members in here, and they were telling me I was going too fast last month. I mean, because I was all over the place. I get it. I got to slow down. I get that. I'm always looking for trades, and I'm bouncing back and forth, and so I'm going to slow down. I apologize, but that think or swim part, I get it. I was moving all over the place. It takes some time to get used to that. And I want to mention something here right off the bat. I don't know a whole lot about the Thinkorswim platform. I am not an expert by far, and there are some people in here that can vouch for that for sure that are in this webinar with me. But I will slow it down, and I do have a step-by-step process of how you'll be able to utilize that link. And I'm actually going to create that link right now, Jay, while you're talking. And I'll have that. I'm actually going to stick it on the chat box for anybody who's ready for it now, doesn't want to wait. So
well, here's the deal. The comments weren't about you being too fast. You get that from time to time. Yeah, the students that were in here that are the tools members were saying that this one right here is because we've expanded this to a lot of the past Optionetics guys. They haven't been paying attention to the markets. They stepped away. So it was more a commentary about them just being grateful to be back, being grateful to have some of this education to catch up on. So I wouldn't say this was directed at you specifically this time, Tom. But again, it's just the fact that they're all back to the market. So thanks for opening it up to everybody. We're getting a great turnout. And what you're going to see here, folks, that I'm doing is with the Darknet scan and the money calendar scan. It may not be as in-depth as we can do it. And, whether Tom provides a link. Let me just tell you this. If you go up into the tools and you go over to the help and you go to the videos, you will see our entire video library here. These are back when we started about 5 years ago to present. And what you'll see here is a bunch of getting started videos. So if you like what you're seeing with Darknet, you like what you're seeing with Money Calendar, just scroll through here and find the Darknet or the Money Calendar. There's even a video here, folks, that says keyword search in this page. When you click on that and you open up the video, it's going to show you how to search up. Okay, it's going to show you how to search up those keywords like Darknet, Money Calendar, IV, credit spreads, all that type of stuff. So when you use, whether it's Internet Explorer, Google Chrome, or Firefox, this video shows you how to do the keyword search. You can go through these hundreds of videos here, find the topic video that you want without having to scroll through and find it forever there now. So I hope you guys find that helpful there. Let's go back to home, Tom's tools. And I went to the stocks charts, and Tom covered the 4 markets, so I won't belabor the point here. But what we were looking at on the SPY is last Friday's low, anticipated by many to be the line in the sand for the markets. And you can see this low kind of coinciding with this previous low back here in October of last year. So that's how fast we came in the 7 trading sessions from the highest in the markets all the way retracing back to the October 19 lows. You'll see this pattern right here. We have 3 days that make up a candlestick pattern. So those of you guys that are familiar with candlesticks, and I love candlesticks, you can see that pattern right there. It's a 3-day pattern being deemed a morning star reversal, and it's a bullish reversal to the upside. and we want upside reversals off of support areas, not resistance areas. So are we, in fact, off a support area potentially over here? Yes. So this may have some weight depending on how this day finishes up and the remaining days to come. And these are good for about, 10-day swing patterns and such. So maybe we get a reprieve for a handful of days here in the markets from that perspective. What Tom wants me to show you guys now is the Darknet home. And now here's the other thing. Before I get into the Darknet and the money calendar, when I'm running these sessions with Tom, I'm usually the support guy handling the Q&A, the correspondence and the emails and the Skypes and the Q&A boards. And I'm usually on top of those pretty good. I'll either ask Tom the questions or I'll answer them myself on the Q&A boards. So when I'm teaching folks, I ask for a reprieve from, how quickly I can reply back. Tom will cover it when I'm here and he's in the background there and all. But if you're hitting me up on the emails and the Skype, that's going to have to table until I'm done with my sessions that I'm teaching here. So I appreciate you guys respecting and understanding that. Here we are on Darknet. You go to home, you can go to Darknet signals and bring up this page. Voila, there it is. Now it's going to start out with the stock list searched for all Darknet stocks. Then it's going to show the trade type displayed, call option trades. Actually, the default is stock list only, no trades. It's going to show you the stock symbols right here, stocks and lists with Darknet bullish signals. What I do is I go one step further and I click on the call option trades line item and then I click on search. The reason I do that is because if I go through all of these symbols right here, and then I want to go look at an option that has a low percent to double, I don't want to have to go that extra step and start searching around. I like this table right here because it shows me the symbol. It shows me all of this data here. It has a green hyperlink here for the call trade, and that call trade is shown because it's on a percent to double column, and that's how this is sorted. It's sorted by the lowest percent to double to the highest. And so the other thing that we want to take a look at here is the slippage. We ideally like a 1.0 or less slippage. Anything over the 1% slippage, we kind of pass on. And the slippage is calculated by taking the difference between the bid ask of the option, divide that into the stock price. So we want the difference between the bid and the ask of the option be less than 1% of the stock price, okay? So here we have a bunch of Darknet symbols, as you can see, 44 of them to be exact. There are days where you may not get but one or two of these. What Darknet is looking for, folks, is a pullback within an uptrend. And it will do what Tom was showing in his 4 markets, where he starts bringing up the channel test. You're looking at multiple time frame support and resistance channels. And what we're looking for is what's called a triple stack compression. We're looking for at least 3 different time frame support and resistance channels to stack on top of each other, where their support areas are matching up amongst the 3. And we also then need the stock price to be testing or bouncing from that multiple support level. So if you got 3 supports stacked on top of each other with the price testing and bouncing from there, that's when you'll start seeing these on the scan results. So if you want to go through every 44 of these, you can click on the symbol. It'll bring up the chart and it'll show you the B for a Darknet bullish signal. Ours will be a Darknet reiterated bullish signal, and S is a stall or stop signal. That does not mean sell, okay? That does not mean that you should sell the stock short or go initiate put trades. Darknet is a bullish scan only, okay? What that S means is that whatever uptrend or up leg may have been happening within the channels is possibly stalling or stopping at that point in time. It can continue further from there. It can continue higher. So just be aware of that it just gives an indication of a possible stall or stopping. Okay, so if we want to go back up, click refresh, and we can bring back that list and that page. Here's one other thing that I want to show you that some of you guys that have been with us, tools members, have heard that the candlestick scanner included with the Darknet is coming down the pipe. For those of you that are new, yes, we want to incorporate bullish candle reversal patterns on these Darknet bullish signals. It's tough to figure out what support is. Darknet helps find a support level. Remember that price is testing a 3-channel support level, and it's anticipated to stop there and bounce higher. So if we can get a Western technical like Darknet and the Japanese candle reversal patterns, then we've got kind of two different indicators coinciding, saying that this might be a good opportunity. So this is not in your tools just yet. It's coming down the pipe. But when you click on the bull candle reversals with your all darknet stocks, look at the results. You go from 44 down to just a handful or 3. I'm going to run it again and just see if it refreshes, because this was done before we got in here. And so here we go. It's about the same. Real quick, Marcia, you can go ahead and email us at support@tomgentile.com and I'll answer you there, but everything's a go, okay? So here we are, guys. We have now Merck, Lilly, Watsco, Chemical. It shows you the additional column of information here, which is the candlestick pattern. So Morningstar reversal, this is a 3-day pattern. The bullish kicker, bullish engulfing are 2-day patterns. But look what happens here, guys. Before we get into the option trade, click on Merck and look at that. You have this zoomed in view now of the candlestick chart. You still see the B's and the R's, but now you have the boxed in candle reversal pattern on top of that. So now we have the Morningstar reversal pattern along with the Darknet bullish pattern. Bullish, reiterated bullish. I'm a bigger fan of the B signals, but I will take an R signal if it coincides with another indicator or another technical analysis sign showing me another reason to be or have conviction for it. So we have Merck, that's a Darknet buy with the Morningstar reversal. I like that. And what I'm going to show you here, guys, is how to paper trade with the tools, okay? So the call trade is already hyperlinked here. It's a March 27th, $78 call for 373. Slippage is under the 1%, and it's only a 6.35% needed to double. So click on the green hyperlink, and you will go to a separate tab, unless you've asked for it to open in a separate window, but mostly it's going to be in a separate tab for the risk graph for the Merck trade that it was showing you there. Okay, we don't need to check the bid ask. We already saw what the slippage was on the previous screen. And we show here that our max risk is the cost of the trade, 372.5 or 373. It's splitting the bid ask there for you. There's a candlestick chart again. There's your Morningstar reversal with your Darknet R or reiterated bullish signal. You can scroll all the way down to the bottom of the page and show what the stock needs to be at over these different time intervals from now till expiration for that option value to double in price. If you have to wait for the worst case scenario, and the worst case scenario is waiting for the very end of this expiration or 0 days left, where does the stock need to be at expiration to still at least pull out a double? 85.45. Okay, let's go back up to the chart. Is 84, what was that again? 85.45 doable? There we go, 83, 86. 85.45 is right in here. The questions we usually ask are, has it been there before? Yeah. Has it been there recently? Yeah. Has it been there more than once? Yeah, once on the way up, once on the way down. So if you feel confident that this recovery could at least pop this another 6% up into that 85, 85.5 range, this is the option. And this is the trade that you can consider. Now, again, we're not registered investment advisors. We're not giving you investment advice and recommendations. Go check with your financial professionals, your brokers, for the suitability to the account for this trade. But I can teach you how to paper trade in the tools all day long. So if you haven't already created a folder, you would go up to, let's go back to the regular page. You would go back up to website, folders, and then create a folder. And you're going to see that I have a bunch of folders already saved. Okay. When you're on your risk graph page and you want to save this trade after you've done all the editing for pricing, limits, number of contracts and such, you click on the folder window. It says all trades, and then you'll find all of the folders that you've named, and you'll see that I have one here for a Darknet Morningstar reversal. I have Darknet all the other bullish reversal patterns as well. So Darknet Morningstar reversal is a folder created. I'm going to select that one. It's going to automatically name it for us, Merck, March 20th of 27, $78 call. And it's at this point in time that you can save the trade. You can go down here and enter in all kinds of different notes that you want, reasons for it, profit target, profit loss, price target, price stops, all the like, and then update from there. And the trading notes are saved in there as well. Now, this is not an actual trading platform, so if you have any target alerts for profit and or for stops, check with your individual brokerage accounts and see what mechanics or mechanisms they have on their site to set the alerts for you in that regard. Otherwise, you're a victim of having to watch the screens intraday, and hopefully you'll catch it when it happens and be disciplined enough to execute your trade plan as you originally set up days ago versus start looking at it and overanalyzing as for what it's doing now. Can I get a little bit more profit? Should I hang on and hope it comes back? That's another lesson plan for another day. But there's the saved trade in that saved folder. That's the Darknet, okay? Now, if you want to go back and go through the rest of these trades, you can, okay? The call option trade based off its lowest percent to double for that string of options for that particular security is listed right here for you. So you don't have to go do a lot of options analysis in the options analysis tools. If you want to just stick with that lowest percent to double option, there you go. That wraps it for Darknet. Again, guys, go to the help in the videos, search up Darknet and watch as much as you want to and or can, and start getting a better grasp for that as you go.
Hey, Jay.
Sir.
Can I show them something that I'm doing in Darknet right now?
Sure.
And let me just.
Do you want the screen back, or do you want me to just kind of navigate while you walk me through it?
I'm actually going to steal this from you because I want to show this in my
Certainly.
broker platform. So I'm going to show you at least. Hopefully, I got 2 trading opportunities for you. One I've got on, so or I'm trying to get filled. So I'm going to show you guys what it is I'm doing. But all right, do you see my screen, Jay?
Let me bring it back up myself. Yes, I sure do.
Okay, so what I did was I wanted to show you the OIH. And so Darknet is one of those, it looks for what we like to call channel collisions. And its long-term results are fantastic. Here's a sell. If you look at, this is OIH, okay? This is something that I'm actually involved in right now. So there was a sell back here. This was back in September. Then there was a buy.
Hey, Tom, are you on that mask? Somebody's asked if you're still in the mask. You're a little bit muted, or you're a little bit in the background there. Nope. Okay.
No, it wasn't on the mask. I somehow it flipped over to a different microphone. I got microphones in this room, and some of them are shotguns and some of them are lavs. All right, how's that sounding? Better?
Much better. Thank you, sir.
Okay, thank you. Thank you to whoever called me on that one. So again, I've got, these are showing the entry or the bullish signals. This is a buy signal on Darknet from back in the beginning of October. There was a rebuy and then a sell, and 11 to 11.5 might not sound like much, but that could be a really good option trade. Now here was a buy and a rebuy, and the third symbol, which is an add-on. Now, if you see this drop, boom, 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 and then today, so we just got an add-on signal today on OIH. All right. So I look at this, and then remember, spot the opportunity. Now this is a little bit of an aggressive opportunity. Now I want to show you something else too. Let's look at, instead of the chart type with Darknet, let's look at the chart type with at the money options, and let's see what the volatility is looking like. Boom. See, this is what the options were trading at a 38 percentile, and they went up as high as a 90 and pulled back. They're still extremely expensive right now for oil. So if we add this on top, so if I got a stock chart with the options volatility all in one shot, this is what it looks like. It's almost like a mirror reaction. The stock dropped, and all of a sudden the fear factor jumped up high. Now we pulled back a little bit on the fear factor, but it's still expensive. So I know that. So let me ask the question real quick, Jay, and you can kind of moderate here for me. If I want to be bullish on this particular instrument, and these options are super, super expensive, what do I do? Do I buy options? Or would it make more sense to sell? And even if you want to create protection, sell with protection. What makes the most sense here based on this red line here? What are the answers, Jay?
All right, we got sell put, sell put credit spread, sell put spread, sell put spread,
Yes.
sell
Thank
with
you.
protection. There you go.
All right, awesome. So I mean, you know, what you all should know by looking at these charts is that this line right here is really what the options are doing. And when this line is on the low side, this is the time to buy calls when you're bullish or buy puts when you're bearish. But when this thing spikes up like this, it's telling you that those options are overvalued. And if you've ever bought calls when you were bullish and it went up and you lost money, you were probably a victim of paying too much. So we want to look at selling, and credit spreads make the most sense. So what is a bull put spread? It is a credit spread that allows you to sell premium safely. And so if I'm looking at this and this low down here, let's say that low is 8.5, and right now we're trading right around 9 or maybe a little bit below 9. I want to look at selling the 9 puts and buying the 8.5 puts as protection. And so because we're slightly below 9, I can put a trade on that actually has very close to a 1-to-1 reward to risk strategy. So here's what it looks like. I'll show you what I've got going on. So here's my current order status. I did 100 of these and I got filled on 3 of them. So here's the trade. It's an OIH vertical put spread. It's bid 23 and ask 25, and I'm trying to do it for 24. So I got filled on 3 and I'm waiting to fill 97 of them. So what does the trade consist of? Well, what I'm trying to do, if I open it up, is I am buying to open the 850 puts, the OIH 320, 2020, 850 puts, and I'm selling to open the OIH 320, 2029 puts. All right, buy the lower, sell the higher. But it's puts, so I want to bring a credit in. I don't care what these prices right here are, the ones I'm buying and what I'm selling. I care about the spread price. And right now I'm in there at 24 cents. All right, so you know what I'm going to do? I'm going to cancel this order. Let's go over here and cancel. And I'm going to
Somebody's
replace
asking
it.
you about your 97 contracts, but that's
my decision.
yes, sir.
You do what you want. All right, cancel the order. All right, order submitted. Now, that order's canceled, submitted. I'm going to place another trade. I'm going to replace the trade. So I'm going to click on place trade just to show you how this works. Okay, OIH. Might have to, okay, there you go, OIH call spread. So it sets up, now look what it automatically put in there for me. It puts in this particular platform, which is Street Smart Central, puts in the closest expiration date and it puts in the closest prices where you're at. And this one is assuming I'm that I am doing selling the call and buying the call. I don't want to do that. I want to do the puts. Now I'm selling to open, buying to open the 850. But I don't want the ones that expire this Friday. I want the ones that expire on the 3rd Friday. I want a couple weeks to be right. All right, so here we go. Now, look what's happened here. The 320 selling to open, buying to open has changed. It's 22 by 20. It's 21 by 24 with the mid price around 22. So I'm going to give them another tick. So I'm willing to do this for 23 cents. I'm going to put in a 23. And this is a limit credit order because I want 23 cents coming into my pocket. I'm going to put it as a day only order. If I don't get filled, then it's going to cancel at the end of the day. All right, so there's my order ticket. And only thing is that I want those other 97 because I got filled on 3 at 24 cents. Now I'm going to try to do the other 97 at 23. So preview. And now it says, okay, selling. We're buying the 850s. We're selling the 9s. I want to do it for a 23-cent credit, day only order. It's basically going to cost me. I'm going to bring in 2,100, but I'm going to risk about 20, 29, 28 something, roughly 28 something. Right? Not quite a 1-to-1, a little bit less. Let's place that order. If you hear the ding, I'm going to get filled. I don't think I'm going to ding right away. Yeah, no dinging yet. Okay, but basically what I wanted to show all of you is that we took Darknet. All right, we took the Darknet trade that I showed you, and this is interesting, Jay. I don't know if you saw this, but check this out. All right, let's go to back to Tom's tools. Now let's go to Darknet, and if you noticed when you looked at some of those, we were looking at the most, you know, it comes up and it shows me what, 15, 20, I mean, there's 50 some odd stocks on here today. But I just want to look at the ones that are most liquid. Instead of all Darknet stocks, I want to look at those pennies and weeklies. These are those options that are the most liquid to trade weeklies. When I do that, you only get a handful of them. Now, 3, 6, 9, 11. Jay, did you notice this? Exxon is on here, British Petroleum's on here, VLO's on here. I mean, a third of them, or 25% of these,
Yeah, they're all hanging
oil
out in the same
stocks.
family.
They're all oil stocks. Yeah, and so OIH came up on here too. You know, that's why I showed it on the chart. If you go to Darknet back testers and you click on chart, and you can see the chart here. I'm going to change this chart to a instead of a stock chart, I'm going to look at a Darknet chart and update. This is Tesla, by the way. It's not a Darknet, but OIH. It's the oil family. There's your add-on right there, your level 3. There it is, Darknet symbol, right? Where's it going? I don't know, but you know what? If as long as it's at above 9, which is really close to where we are right now, by March 20th, if I get that 23 cents, I'm going to keep that 23 cents. Okay. So I wanted to show you guys the third step, which is planning, executing, managing the trade. So Jay, I'm going to turn this back over to you so you can look at money calendar. And I might have a money calendar trade that I'm going to place. So I'll wait until you're done. That way, if I spot something, I'll place it. So Jay, are you ready to take control?
Yes, sir. Yep. Send it my way.
You got it.
One last thing, and I was trying real quick to find the video in the video file. There is a video, folks, that will show you how to take an outside list, meaning one website we like to look at is sectorspider.com, and it'll show you the 11 S&P 500 sectors broken out by healthcare, financials, technicals, consumer discretionary, and you can copy that list from that website, import it into the tools, and create a list for just financials or just energy and oil. I don't have it in here just yet, but so for example, Sector Spider Financials, call option trades, click search, and it'll do a Darknet search for just those stocks from that list. And there's a couple right there from the Financial City Court in Fifth Third. That's not what I wanted to get into, but that is a way that you can either recognize it like Tom did, or you can actually go search out a specific Sector Spider list after you created that list within the tools. And those videos are in there to help you get that done. All right, so let's get over to money calendar here. And let me get to the money calendar itself. And what this scan does, this is not a technical analysis scan. It's not using technicals. It's using price over a specific period of days within a calendar year. And it crunches the millions of data points to find a security that from one start day to a ending day, whether it be 5 days, 15 days, upwards of 30. We do not exceed 30. This is the max 30-day scan that we look for. It will calculate from a trading day start to a trading day end, and it will calculate the average price move higher or lower over that period of days and give you that data. And what we're looking for is securities that have a 90% track record, meaning 9 of the last 10 years this stock is traded higher, or 9 of the last 10 years this stock is traded lower. And then we can look to build an options trade around the fact that this thing has traditionally gone up or lower over this period of days 90% of the time, and see if it can just do its average one more time this year. Is there an opportunity for us? We like to shoot for doubles. We may not always get doubles, but you know how funny that is, Tom. We get spoiled after we've learned from you, brother. We're trying to get these 100%ers that if we see a 72%er or a 68%er, all of a sudden that's just not good enough for our money anymore. So thanks for spoiling us, Tom.
And you know what, Jay, when volatility is twice as high as it normally is, you shouldn't be looking for those type of returns because it's just so much harder to get.
Well, yeah, I mean, with the ungodly option pricing and the spreads that widen out on periods like this, yeah, it makes it a much more challenging environment. Amen to that. All right, so what we're looking for is stock moves higher or lower over a specific period of days that has done so over that same period of days, those trading days, 9 of the past 10 years. So we click on Monday, March 2nd, and you'll bring up the list of all the different candidates that are here. It's going to show you the duration. It's a 30-day period of time. It shows you the accuracy, 9 of the last 10 years, 10 of the last 10 years, the average profit, which I look at that in points. It's moved 13 points, 6 points, 4 points, and so on, your end date, and your power meter. Now, power meter, let me just show you this real quick, and I'm not going to use Ulta as an example for a trade, but look at Ulta. In the last 3-4 years, the profit moves, and you can put your cursor on one of these green bars and it shows you the profit and loss for that particular year. This one went up 34 points last year. Are the price moves, the profit moves, higher in the more recent years than the cumulative 10 overall or the back half? Absolutely. And that's what the power meter is measuring. Are the profit moves increasing in the more recent years versus all of them? It is not a directional indicator. The power meter does not gauge bullish or bearish, because you can have a bearish candidate and still see profitable moves here. What does that mean? It's gauging the stock going down in price, and it's under the premise that there's a short sale. So if you sell the stock at 40, buy it back at 35, there's a $5 profit move there. And that $5 profit will be reflected with a green bar here, okay? So bullish or bearish, your power meter is assessing the profit move, not the direction of the stock, okay? And then we want to see the more recent years have the higher profit moves, which means, you know, the moves are getting more robust in the more current years than they were way back when, okay? So let's go back to the list, and you do that by clicking on View Day. And the first thing we do is we double left click on Power Meter. That way we bring in the highest positive power meter to the lowest. And anything above 0 is a positive power meter. So yes, 1 works, 15 works, 100 works. Higher the better, but a positive power meter means it qualifies, okay? What Tom and I have done, we've looked through this, and as we just talked about, you know, the spreads and the slippage of these options and the prices of these options are getting so high, it's tough to find an option trade on these that we like. One that we kind of settled on that we liked was D.R. Horton, Residential Construction Company here, DHI. And when you click on the symbol, you go to this page, and it's a replication of the information you saw on the data table previously. But it's at this point in time, folks, that if you want to be conditioned to money calendar traders, you're going to write down on a separate notepad your money calendar information. So the first thing we're going to write down is the ticker symbol, DHI. What's the current price for DHI? Before we were talking, it was around 54. If anybody wants to type it in and tell me what the current price is on DHI, go ahead and let me know, guys. If it's around 54, I'll keep it at 54. 54.21, okay, 54, we can add in the 21 cents there. So now we want to say, okay, when is the expiration date? Well, we'll figure that out in a minute. What's the end date? This has been analyzed 9 of the past 10 years, that it's gone higher from March 2nd to April 10th. Not so much specifically those calendar dates, guys. We give you those calendar dates to help you with planning your execution of the trade. They're more or less trading days. So whatever trading day number March 2nd was and trading end date number was for April 10th, that's kind of the behind the scenes stuff with the algorithms and such. But over the period of days from roughly March 2nd to April 10th, it's gone higher. How much? On average, 145. Now, some of you guys are going to type in it's not greater than 3. 3 is what we prefer. It's not a deal breaker. But if you look at these last few years, you know, if you go 3 or 4 years and you add those up, it's averaging out close to that or right at that $3 move, okay? So what we want to do is write down the current price, the average profit, and your target. So if we take the 145 to the 54.21, we're looking at a target price that we could expect DHI moving to. 55.66 is what I have for my math. You guys, if I'm off a few pennies, I apologize, but there you are. And if you use the $3 on average over the last 3-4 years, that would put the target at 57.21. Okay. So it's at this point in time, we don't need to do any more information or write down any more information for money calendar. We got what we need. We have the stock, we have the period of days, we have the fact that it's moved higher over this date range 9 of the last 10 years. We see a positive power meter, and then we have the expiration and target date. Now, just bring up the calendar. We don't want to have an expiration prior to the end date. That's cutting off the options trade before it has a chance to run its full period of days. But we will go, just past the end date. So if the end date was April 10th, let's look at April 17th, okay? And that just happens to be the third or the standard expiration for the month. It's not a weekly. In times of extreme volatility like we're seeing here, guys, and Tom still to this day conditioned me, these weeklies have lower open interest and volume, but more importantly, their spreads are so much wider that it's a challenge to do these weeklies a lot of times, and especially in a high volatility market like we're having. But we like it when it matches up that we can do at least the standard or the third Friday expiration of the month. So April 17th is going to be our expiry. Okay, now we want to see if we can build a trade around that. That's going to work out for us. So here's another way that you can search up option trades with the tools. We don't need money calendar anymore. You can bring up a second tab or a second window or even be on a second computer and be into the tools at the same time in the same account. The thing is, if we do searchers, multi-strategies, and then find trades, we're getting out of the money calendar. And if we want to go look for a new candidate, we have to go back into money calendar. Having it open in a second tab allows you to do your options analysis in one tab and your money calendar research in the other. So here we are. We're on the find trade screen. Let's type in the symbol DHI. If you do not change the symbol and you enter in all this other information over here and click search, it's going to default search on the symbol that was already there. So type in the symbol, click change, and now you're set to do your analysis on DHI. We're bullish. We're always going to leave implied volatility low for this screen, less than 45 days. On all money calendars, it's always going to be less than 45 days because money calendar will not search for anything longer than 30 days. And we can click on buy call or call debit spread. We were looking at a spread, so let's click on call debit spread. It will auto default that in the selected strategies, and it will automatically highlight in gray the line item for bullish percent to double under your trade sort method. And when you do that, you'll click on search. A question coming in right now on ECL, you guys can go look at the options and double check how ungodly those spreads are in those options pricing, and that may answer the question as to why not ECL. So ECL may be a great looking chart. It may have the money calendar data backing it up, but if you're going to get into a spread that, is like 10 to 15, 20% wide, that's a challenge. So here we are, DHI. We're looking under this click trade below for options analysis column, and we're looking for an April 17th expiration. And I can tell you it's not there. So that unfortunately sends us back to doing the options searching the old school way, which is going to options, clicking on option chain, and start trying to look through the options chains and setting up different option combinations to see which one works, which one you like, that kind of thing. So let me see if I can get this back to the option chain. There we are. So because we came from the DHI, somebody doesn't know that we're in class. Tom, I thought we got everybody, but one slipped through.
That.
Yeah. All right. So here's DHI. If it's not there, type in DHI, click update. We want to select over here in the expiration months, analyze the April 17th expiration and click update. Now, when we go down to the options data table, we are here for the DHI April 17th, 2020 expiration. 46 days remaining before expiration here, okay? Now, we're going to max hold on to this for the 30 days, okay? Here's another point. It's up to you if you get to 30 days and you want to hang on these next 16 days. You don't have the money calendar data showing you what to expect from the date range of March 2nd to 46 days out. So you would be kind of flying blind there, if you will, to hang on. So adhere to the end date, even if the end date is or expiration is before the end date. we're going to then default to using the expiration. Okay, so here we are. We have the delayed quote here, but we're looking at a target of what price? 55.66, or if you use the aggressive $3.57. Either way, on a debit spread, a call debit spread, we need the stock to be trading above the sold strike of our spread. Okay, so do we want to do a 57.50? No, because the stock doesn't say it's going to get up there. Maybe if you use the aggressive 3, it gets close, but we want worst case scenario, if we have to hold this until expiration, we want to wait, or we want to look for an option strike that we think the stock will be above when that happens. And we can assess where this stock may be based off the data we just did. We have the stock's current price, we have the average price move over the past 10 years, and if it does at least that average price move, we can expect 55.66 to 57, above 55. So it's that 55 strike that I would use is where I'd start typing in my sold leg. Okay, so if I'm going to sell a 55, do I then buy the 52.50 or the 50? Play around with it, see what kind of returns you can get. Let's start with the 52.50. Okay, this is a 2.5 point wide spread. What has to happen is DHI has to be above 55. I'm going to switch over to Skype on my other computer next time, Tom, so that doesn't happen. I apologize, guys. Okay, so sell the 55, buy the 52.50. If the stock is above 55 and the world has the right to buy it from you at a lower price, 55, will they do so? Very likely. So if the world has the rights to buy it from you at 55, you have the rights to buy the stock at 52.50. There's your $2.50 that you make, and that $2.50 is offset by something. Click on a risk graph, and that $2.50 profit potential is offset by the $141 cost. You can make a max $109 with a $141 risk. That's a 77% ROI. Now, we just had the discussion. We like 100%ers. We may not always get them. Tom pointed out this is not the market environment in which you're going to go ahead and start searching out and banking on getting 100% returns. But in this type of environment, with a slight bounce in the stock, the opportunity for 77% return, does that sound like an optimistic trade to at least paper trade? Track out, follow through on. Okay, well, here's the other thing you can do. Click on edit right now, and let's go ahead and widen this to a $5 wide spread. So here's your edit trade. You have the sold leg and the bought leg. Okay, so if we were buying the lower 52.50 and we want to widen it to a 50, click on 50, click on risk graph, and compare that. Come on, tools. It's not the tools, it's my mouse. So there we are. Okay, a $5 wide spread costing $3.25. That's going to reduce your potential ROI to 53.61, 53% return. So now you decide between the two, which one you like, or maybe you don't like either, and you just move on to another security and go through the same analysis process. Okay, so there's that 50-55 morality that you were just asking about. You decide which one you like. You can go down and see where it needs to be. There's no percent to double there, so that doesn't have to factor in. Your questions between the two are, do you want to go after 77%er or the 50-something percenter? Okay, so if you like this one here, same thing. Find your appropriate folder, and this would be a money calendar buy, and then click save. Tom, did you want to show them what you're doing money calendar? Did you find something that you're looking at?
You know, I didn't.
Okay.
I mean, I looked around in the ETFs because I won't. I'm not going to place a stock order ahead of people. I just won't do that. You know, that's kind of considered front running.
Right.
And in fact, in the few times that I do find something to place it, it's good. If it's an ETF like OIH, no one's going to move that. But I don't want to be, I don't want to be somebody who's going to be accused of front running. So if I'm looking out there, and a lot of the options still have a little bit wide bid ask spreads. I'd put it in as a limit order anyway. But typically I go in and show maybe a 1 or 2 lot as an example. But what I can do is if you want to walk me through the DHI trade, I can show how that goes in.
I'll leave that up to you. If you want to go there, I
Let's
mean,
do
we're
that.
doing
So
a.
I will take up. I'm going to take the
Yeah,
con back from you.
yeah. This is an April 17th, 52.50.55.
Okay. Well, let's go
Couple
ahead and.
questions. You took it back, right? Correct?
Yep.
Okay.
So
Real quick, let
first
me
is
get
the
this one here.
symbol.
Why are we not using the money calendar trader? Money calendar trader has a specific algorithm that will find one option opportunity. There may be others. That could be a lesson for another day that we get into there and show that and such. But I wanted to show you how you can find the option trades, play around with them, look at different option trade opportunities besides just the one that money calendar spits out. Okay. Secondly is, why didn't we do a 55.60, or could you kindly look at a 55.60? We're not going to do that, Subaru, and the reason why is because our price target doesn't warrant us looking at that. Remember, we want the stock to be above the sold strike. We buy the lower, sell the higher. That means you'd be selling the $60 call. This analysis from money calendar doesn't show that it could hit that $60 target. So we'd be setting us
Right.
up in a position asking the stock to do something that it doesn't even have the historical background and the numbers to show that it can even do that. Okay, where are we at,
All right.
Tom?
So Jay, it's DHI is the stock symbol. Are we doing
Correct.
call puts? So walk me through
Call.
this. All right. So I'm going to click on call. Is it a call spread?
It's a bull call spread or
All
call
right. So
debit
then
spread.
I got to make sure it says call spread then.
Okay.
All right. So now we're going to use the April.
April 17th.
Okay, that's good. Those are week 3 options, so they're the most liquid of the whole bunch.
Yes, sir. And the strike that we are buying to open, buy the lower, sell the higher, buy 52.50, sell 50.
So this is a bear call spread? Oh, you're buying the 50, selling the 52.
Forgive me. Is that what we're doing?
Yeah. Buy
It's
the
right
lower,
there.
sell the higher.
We're buying the 52.50, selling the 55.
Ah, okay.
Buy the 52.50, sell the 55.
And then you want to put this in as limit order, correct?
See if we can get it for what price there, guys. It's coming in at $1.41 natural.
I see 127 by 151 on the screen right here, right now.
Okay. You want to try
So
$1.50?
You know, if 140 were your target,
Where the tools were, yeah. Okay.
then you could do that. There's the preview. And it's going to cost you 100. Well, this is 141.05 with the commission, which is really just nothing these days. So that's it. You place that order, and you'd be, you know, may get filled, you may not get filled. It really kind of depends on whether there's somebody on the other side of that trade. But that's how you'd place the order, you know, and you would obviously translate this into whatever brokerage firm you're actually using. All right.
There you go.
And that is order placing. And we talked about placing orders and using brokerage firms. I still, just FYI, full disclosure, I've not got filled on those other 97 contracts of OIH. I'm going to leave it in there. Maybe I'll get filled by the end of the day. If not, it's going to cancel, and maybe I'll take a look at it again tomorrow. Okay, so that brings me to the final things that I want to cover with you. So I am going to create and share that Thinkorswim link. So what's going to happen is, for those of you that are interested in this, when you receive the email with the copy of today's webinar, below that is going to be some information on using TOS, and I'll have a link there, and I'll also have a couple of captions of how you would set it up on your screen. And we'll do this again tomorrow. We'll look at the screen, and I think what we'll do is, for the next couple of days, Jay, because we covered a lot of information in an hour and a half. Wouldn't you agree?
Agreed.
I mean, usually what we do with Option X students is we'll focus on buying calls and buying puts, and we might go into an idea of how to do that. We talk about risks, rewards, etc. And then one week we might talk about Darknet. One week we might talk about a money calendar, and we kind of covered all that in an hour and a half. So I think what we want to do is maybe slow it down a little bit tomorrow, and let's just focus on maybe Darknet strategies tomorrow and talk about exactly how Darknet's created, and we'll talk about the whys again, and really getting into calls or call spreads versus puts or put spreads, etc. And you know, and then just knocking out that repetitiveness in terms of finding that darknet signal and creating that low risk trade and planning, executing, managing that trade as we go through. And I'll be, you know, if I find some live trades, I'll throw them out there to you guys and show you what I'm finding out there as we're moving through. I was batting 1,000 all through on our open and close positions that we were showing to the group in February. I had one trade that came out at the end of the month, and it was we were going long. We're still in it. The S&P, right? That S&P using the SPY trade, and we're looking at that's a trade that we're holding until Thursday, but it's coming back. It went against me on Friday, but it's coming back. Went against me Friday morning and then came back, and I'm still, you know, it was a Thursday trade, so we had to suffer through Friday, had to suffer through, you know, until Friday afternoon. We started seeing a pullback, but today is really extended. We'll see what happens and see whether my batting 1,000 stays alive as we go into March. But like I said, as I find some trades, and I'm happy to tell you what it is that I'm looking at on the short-term side. And I will follow through with those and let you know whether they won or lost money. So at that point, this is where we end each of our daily sessions, is with the Optionetics mantra. And our mantra is a 3-step process. No matter what we're doing, we follow this process. Spot the opportunity. In this case, we look at the best rules-based patterns for stocks and ETFs. And today we looked at primarily the Darknet and money calendar. And tomorrow we'll really kind of focus in on, we'll look at the overall markets, we'll look at Darknet. I'll talk about my open positions tomorrow, and we'll really just get into Darknet, tried and true. How's that sound, Jay? And then
I love it.
Step 2, create that low risk trade. And what we'll do is we'll analyze what a call would look like, what a call spread would look like, what a put spread would look like on the same underlying asset, its risks, its rewards, each of its break evens, what it's going to do point by point as we're going through it, and then finally planning, executing, and managing that trades and putting that into your broker term, both the entries and, if fulfilled, the exits. So that's our plan. So those of you that are with us for the first time today, if you could use that Q&A box right now. You know, as I'm looking, tons of stuff that have come out here. Could we show the screen of placing the DIH order again? I think I have it right there. It is, and that's it. So and so, guys, take a look at this. Think about about spotting the opportunity, creating that low risk trade, plan, actually managing the trade, and tell me if this is something that you think we want to continue on over the next 2 weeks. Was this, for those of you that are new with us, you weren't here in February. We invited our tools members, we invited our partners, and so that was the group that we invited all month long last month. And I decided for the first 2 weeks of March that we were going to extend this. We called it the February Challenge. And at the end of February, I said, let's do this for 2 more weeks of March before I go to New Zealand. Well, guess what, Jay? I'm not going to New Zealand now, because
I didn't think so.
The boss said, no, we're not getting on an airplane. I don't care what kind of masks you have. We're not getting on that plane and going anywhere. So I'm stuck. And so I thought, you know what? I'm going to extend this out. So we're going to do two weeks, and wanted to invite everybody who is part of our Optionetics group to join us for the next 2 weeks as we do that look over the shoulder. And by the way, next week we're going to get into calendar spreads. All right, so along with what we're doing next week, we'll get into the same thing, but we're going to do a slant on calendar spreads. So tomorrow, I think we're going to focus on just the vertical strategies and applying them to Darknet. And we'll do the same on Wednesday. We'll do the vertical strategies and how to apply them to the money calendar. Just kind of slow it down a little bit. All right. But your homework assignment tonight, if you're interested in this, is simply this. I'm going to send you an email. You're going to have a link And if you have Thinkorswim, great. And if you don't, you want to download it. I don't care if you use it or not, guys. Honestly, it's just a tool, okay? If you don't want to use it, no skin off my back. I just thought I would share it with you guys. It's something that I look at. Happy to give you that tool that you can use. You can import it in and play around with it tomorrow. So your homework tonight, if you want to do it, is add this indicator to your Thinkorswim package, and you know, make the charts and create the SPY and the TLT and UUP and USO. And we're going to follow those tomorrow because there's some really interesting patterns that happen, short-term patterns. We traded them in February. We had a couple days. We actually had everything lining up and we traded them. And I think we almost doubled our short-term SPY calls when everything lined up. What was it? About a half an hour, 45 minutes. We got a double. I mean, it was nice, and they don't happen every day, but when they do, it's something that that we want to show you guys. So we'll review that tomorrow, and then we're going to get into Darknet in a lot more detail. All right. Hey, recording is coming to you. All right, we got a recording. Will be coming to you here real soon. And guys, I want to thank you once again for joining us on this Monday, March the 2nd. Glad to have you here. We'll be here again, same bat time, same bat channel, and we'll be hitting it again, guys. So we'll see you tomorrow at 1 o'clock. And till then, have a great rest of your day. Bye now. See you, Jay.
See you, Tom. Thanks.